Aubrey? Hello?
Okay.
Hi.
Hey, can you hear me okay?
I can hear you perfectly.
Okay,
For those who are on right now that can hear us, we're going to be giving it a few minutes before we start this session. If you're having any problems, please let us know in the chat section. Thank you.
Can you hear me?
Hi, Jerome.
Hey.
So we're going to be waiting for a couple of more folks before we get started. It looks like we have currently 44 people in the session.
Okay. Can we set a background on this? Do you know?
I don't know. Aubrey, do you know if we can set a background?
I don't think so, but I'm not 100% sure.
Okay. When I went to settings, it didn't say anything about
Yeah, I don't see it in the settings.
the background. Okay.
So, Jerome, I'm just going to kick it off by letting the panelists introduce themselves. And then we're just going to have a conversation.
Okay. What do you see behind me? I need to clean this up a little bit.
I see a lovely plant that is draped across the photo. I see a window. Looks very nice.
Okay. I hear a fan in the background.
You do?
Somebody's saying mom or something.
I don't know. That's my kitty cat. He talks.
Want some attention.
Actually, that's my husband's kitty cat.
Ah.
I'm a dog person. My dog is being quiet in the corner.
I'm a dog person too. And my dog is going to be quiet until he sees a squirrel or a cat. Hopefully he doesn't.
So I hope that happens. Yeah, if someone knocks on the door, I'll be going on mute. All righty, it's 12:32, and so as the other panelists join Jerome, we're gonna get started, but we'll add them into the conversation. But right now, We're in the alternative funding and PPP forgiveness session. Hello, everyone. My name is Nicole Picard, and I'm with the United States Small Business Administration. I support the Columbus District Office, but I actually report to the Cincinnati branch office. My title is a Lead Economic Development Specialist, so my job is to engage the community about all of the SBA programs and services that are available. So I'm your co-moderator. We have a secondary moderator, Aubrey McQueen, and I will allow her to introduce herself.
Everyone, thank you for joining us. Well, like Nicole said, my name is Aubrey McQueen. I am the Outreach and Marketing Specialist for the SBA's Columbus District Office, but I also support Cincinnati. And I'm glad to be here today.
Thank you so much, Aubrey. And now Jerome. Jerome is also a colleague of both himself and Aubrey. So I will let Mr. Jerome Jones introduce himself and tell you a little bit about what he does for the agency.
Okay, thank you, Nicole and Aubrey. I'm Jerome Jones. I am a lender relations specialist with the Columbus District Office of the Small Business Administration. Background is banking and finance for, we'll just say, a very, very long time. And here to answer any questions you might have about alternative funding and the PPP program.
Outstanding. So we will soon be joined by 2 additional panelists, but until that occurs, we're going to go ahead and get this started. There's a wealth of information that Jerome has available for today's participants. I kind of like to start this conversation, Jerome, by let's just set the tone. COVID-19 was a whopper, something that we have never seen in our lifetime. It was something that many people were unprepared for. And as a result, the federal government took unprecedented measures in order to assist small businesses from the ramifications of forced closures. One of those measures that became enacted was the Payroll Protection Program. FYI to everyone who's still listening, this is still an active program. So first of all, Jerome, I'd like for you to give us a little bit of background on the PPP, what it is, what it's used for, and for those who are still interested, what they need to do now to still be able to utilize those funds.
All right, so the Paycheck Protection Program is, as the name states, it is a program that was enacted to fill gaps in your payroll. So to help people who were displaced due to COVID or unemployed due to COVID maintain a paycheck for a period of up to 2 months. The program rolled out initially in April of 2020. This is a program that is administered by lenders, by SBA approved lenders. And for this program only, we allowed lenders who were not previously approved to do SBA loans approval to do just this Paycheck Protection Program. And there were, I want to say, several dozen who were added just to do the PPP loans. So the program was to give you 2 months of payroll, and there was an amount to cover utilities and either rent or mortgage interest, not mortgage principal and interest, just mortgage interest. So initially, and this program, I want to say, has been tweaked and updated numerous times since it was first introduced. Initially, 75% had to be used for payroll and payroll-related expenses. So your healthcare insurance could be rolled into that as well. And 25% could go towards utilities and either rent or mortgage interest. I'm going to say within 6 weeks or so, they modified it to 60% could go towards payroll and payroll-related expenses, and up to 40% could go towards utilities, rent, or mortgage interest. You did not have to use the program for rent and mortgage interest. It could go all to payroll. Initially also, you had 8 weeks in which to use those funds. One of the tweaks that was made, because a lot of small business owners were saying, well, we just can't get people to come back, or we can't get our payroll at the same level. So what do we do in those circumstances? And so they modified it to go from 8 weeks to up to 24 weeks in which to use those funds. So that's a few of the larger changes that were made to the program.
So I see in the chat, we actually have two of our panelists are in the audience, Diop and Ella Fry, who were not able to connect in the session. Hopefully someone in the background can assist them in joining us in the session, but if not, Ella and Diop, please unmute yourselves if that's possible to make your contribution, or simply put any relevant information in the chat. But we definitely want to make certain that we get your voices heard. So Aubrey, please feel free to jump in at any time. But Jerome, you and I fielded so many calls from members of the community regarding both the PPP as well as the EIDL.
Mm-hmm.
And for those on the phone, EIDL stands for Economic Injury Disaster Loan. And the biggest difference between the EIDL and the PPP on the administration side of it is the fact that the EIDL was a loan that utilized no banking intermediary. So in that case, the Small Business Administration directly made funds available to qualified applicants. Whereas in the PPP, there were banking intermediaries, lending intermediaries. And so instead of coming to us and making the request, you would go to the bank, who would then come to us on your behalf. So Jerome, the question that I have, since there was a change made in terms of the time frame of how long you had to use the funds from 8 weeks up to 24 weeks, one of the questions that I repeatedly got, for folks that got the first phase of the PPP, was it extended to 24 weeks? Was there a grandfathering in, or were they subject to the original 8-week term for that first PPP phase?
So they were grandfathered in. However, most of the small businesses, since that was the time frame that they had originally, they did adhere to the original 8 weeks. There are some that didn't, so they were able to take it to a longer period. And I forgot to mention one very, very important component of the PPP program is that the loan is forgivable. So if you use those funds as you were supposed to, then all of the money could be forgiven. One of the main differences, and I think this might have been where you were going with it, Nicole, you could not use both programs for the same purpose. You could get both an EIDL loan and a PPP loan. However, if you used the EIDL loan, which came out a little sooner, maybe a few weeks sooner than the PPP program, and you used it for payroll, you had to wait until those funds were used up for payroll or cease using it for payroll, and then use the PPP fund. So you couldn't use it for payroll twice. Like you could use one after the other as long as you can demonstrate that. And one of the very, very important components or aspects to the PPP program is that you really have to document what those funds were used for. It would have been a good idea to open a separate account for the PPP loan. We couldn't make you do that, and it's definitely up to you. But just for the sake of record keeping and documenting, if everything that was in that account went to payroll and payroll-related expenses and your other allowable expenses, it's a lot easier to go back and create a paper trail, which would allow for forgiveness.
Thank you, Jerome. And as I see questions populate, I will bring them to your attention. The question that we have from a participant is the Economic Injury Disaster Loan still an active program?
Yes, so the EIDL loan is still active. It's active until the end of the calendar year, so 12/31 of 20, or until the funds run out, whichever comes first. I know there's money in there now, but I would not wait till the last minute. Definitely, if you feel that the idle is a good fit for you, I would definitely apply as soon as possible. And the website is COVID, COVID 19 relief.sba.gov. Not at SBA, it's .sba.gov to access the idle loan.
He has provided the link for the idle information in the chat section for those of you who want to take a picture of it or write it down or cut and paste it for your later use. Jerome, can you please, and this may be confusing some people hear when you say that the idle program is still active, but then they're hearing that a grant program that they kind of hear is associated with idle is no longer still active. Can you please describe what they both are and what is active and what is no longer active?
Yes. So after the idle loan was introduced, about 3 to 4 weeks later, they introduced a grant component to the idle program called the Idle Advance. They didn't call it a grant, but that is in essence what it was. And the Idle Advance is based upon your number of employees. So it was $1,000 per employee, not contractors, but actual employees, W-2 employees. If you were self-employed or a solopreneur, that $1,000 would be just you. And so you would just get the $1,000. The idle loan, on the other hand, is as it states, and it's an actual loan. It's a very low interest loan. So you're talking 3.75% for for-profit businesses and 2.75% for nonprofits. And I'll touch on that a little bit later because it's a very important point. And the term is up to 30 years. So very low payments. There's no prepayment penalty, and there's no payments at all for 12 months. So the idle loan was a real godsend for a lot of small business owners. Now, I want to mention, again, the nonprofits. This is the only program that the SBA offers that nonprofits are eligible for. So in all of our other SBA programs, you have to be a for-profit business. But for this program, realizing that there are a lot of nonprofits that were affected by COVID, just like for-profit businesses, they did open it up to nonprofit businesses with a slightly lower interest rate.
So Jerome, just in quick summation, and Diab Adisa, I'm so glad that you were able to join us. I'm going to introduce you and bring you into the conversation shortly. But Jerome, so initially there were a total of 3 SBA affiliated COVID-19 relief resources, if you will. There was an economic injury disaster grant, which is no longer available. The economic injury disaster loan, which is still available, and Aubrey did put the information for your benefit for the participants. And then there is the Paycheck Protection Program, again, which is still available.
No, the Paycheck Protection Program is not available right now.
Thank you for that clarification. So
it did end August 8th.
August 8th, thank you. So one of the 3 are still available, and that is only, for those who are listening, only the economic injury disaster loan. That is the only resource right now that is currently available through SBA, correct?
Correct. That is correct.
Thank you.
We also have the debt relief program.
Yes.
And that's for new loans, that's going to be until September 27th, if you wanted to touch on
that.
Yeah, so the SBA is making the principal and interest payments on all SBA loans that are existing and closed and funded until September 27th. So it must be closed and funded by September 27th to qualify for this program. But for 6 months, the SBA will actually make your loan payments for you. So thank you for reminding me and mentioning that, Aubrey. That's very important, and a lot of small business owners are really taking advantage of that.
Thank you so much for that, Jerome. Now, at this time, I want to bring in our 2 additional panelists, Diab Adisa, as well as Ella Fry. I'm going to give both of you an opportunity to briefly introduce yourself and the organizations that you each represent. Diab, can you please go first? Thank you.
All right, thank you. Good afternoon. So I'm Diapadisa. I'm with the Kepler Institute, which is a nonprofit grassroots community organization based in Indianapolis, Indiana. We're about roughly 20 years, and a lot of our work is grounded in helping mentor youth through an intergenerational approach, and we use entrepreneurship as classrooms to solve community-based problems. So that's just a little bit about myself. I've been with the organization since its inception back in 2003, so 2003.
Thank you so much. And Ella Fry, a very close collaborator with the Small Business Administration and a strong community resource partner as well as advocate. Can you please tell us a little bit about yourself and your organization?
Good afternoon. I am with Ohio Economic and Community Development Institute and the Greater Cincinnati Women's Business Center. We provide technical assistance, one-on-one coaching, business training and education, as well as access to capital. ECDI has been around since 2004. We have offices in Columbus, Cleveland, Toledo, Akron, and Canton, and I opened the Cincinnati office in 2018. We have 2 locations in Cincinnati, one downtown in OTR, and the other is in Norwood as well. We are a micro lender for SBA. We're number 1 in Ohio as a micro lender and 3rd in the United States.
Thank you for that, Ella. Thank you so much. So when we think of alternative sources of capital or alternative funding, many people think that their only opportunity for access to capital is through a traditional bank. And if that opportunity is not available to them, many times they think that's all they wrote. So can you please explain how the vision for your organization might take an expanded view of someone's profile when thinking about providing them access to capital, Ella?
ECDI is an alternative lender, and we're a nonprofit 501c3. However, we're certified by the U.S. Treasury as a community development financial institution, where we get funding from various sources to lend for those individuals who are at the idea stage or the pre-business launch stage or expanding. Our funding looks at the character of the borrower as well as their business plan. We are not tied to certain conditions like a minimum credit score of 650. Our minimum credit score is 590, and we have a background check as well. What we try to do is work with businesses providing the technical assistance and training and education. We realize that many times for many entrepreneurs that are been operating successfully, they may have some financial hiccups in their background. And we understand that. There's a reason why that happened. They may have gone through a divorce, or they may have paid their child's tuition rather than paying their mortgage for a couple months. So those things happen. So what we do is provide funding for those individuals. And some of these individuals have never borrowed money before. They might not be quite bankable, so we help them become bankable. So what we look at is providing funding for working capital, leasehold improvements, equipment and inventory. And many times we do not look for as much as collateral as a bank would. We have a program now, if you're seeking to borrow $20,000 for us for your business, provided you have a good business plan and the revenue model is there and it shows the business has the ability to pay the loan, pay back the loan. We may not ask for collateral at all for loans under $20,000. We basically will provide a signature loan unsecured. So that's a little bit different than a traditional lender. Overall, we do work with traditional lenders that may refer clients to us for various reasons. And that's our partnership we have with Small Business Administration as well as our partners in the community.
And Ella, you mentioned something that was very important. You said that if your business model showed projections, or if it demonstrated what you wanted to see, and often this is done in the form of a business plan, right?
Correct.
So I know that your organization provides technical assistance, but I'd also like to turn it over to Aubrey for a quick moment to talk about what resources does SBA have in order to assist individuals with regard to the technical assistance that they may need to get their business plan up to par.
From the SBA's standpoint, normally what we would do is connect you with a small business development center counselor, and people who are work for the small business development centers are located in your communities. We have in Cincinnati, we have in multiple counties across Ohio, and they are well versed in all aspects of starting a business, growing a business, or et cetera. So we would connect you with a counselor who would be able to help you with the business plan, with learning QuickBooks, or whatever assistance you may need.
That sounds perfect. Aubrey, SPDC is such an important resource partner. But Ella, I know that you also have a technical assistance component to your organization. Can you talk a little bit about that?
Through the Women's Business Center, we offer online services with COVID-19 currently now. We have online services to help businesses develop a business plan. And we still do one-on-one coaching by appointment. So we have the ability to help you in terms of looking at your market, helping you with your market analysis, helping you with your projections from a financial standpoint, as well as what's a 12-month cash flow projection, what is break even, those types of things. Can your business handle the debt service? We help you with that particular support. We are able to provide this service at no cost to a client. So it may take you 3 weeks or 6 weeks or 8 weeks to help to allow us to help you through the process. But we are there for existing businesses. And sometimes clients only come to us and say, can you help me with this loan package? I plan to approach the bank to borrow funds. Can you help us with the presentation of the business plan, the projections, and also supporting documentation as well. Other things we help clients with in terms of getting established with the Secretary of State, talking about the different forms of ownership, sole proprietorship versus LLC. What does that mean and what's that component about? Also, financial literacy as well. Helping them if they know that they need a little support in terms of improving their credit. We offer that technical assistance as well.
Thank you, Ella. Now, Dia, with regard to financial literacy that Ella just mentioned, when you first spoke, you said that your specific organization focuses on youth entrepreneurship. Am I correct?
Yes, that's one of our focuses.
That's one of your focuses. Can you tell me the importance of your organization's viewpoint in focusing on the youth, and why was that important to your overall mission?
Yeah, I think it's important to our overall mission because, for one, if you're trying to build something that can sustain, it has to be intergenerational. And then if you want to develop young people who then become adults with leadership skills and have the skill set to take risks, to look at challenges and not shy away from them, you have to put them into tangible classrooms at an early age. So by the time they become adults, it's not foreign to run a business or to use an enterprise to address a social issue in their community. It's also empowering. They become very astute and used to seeing themselves in decision-making processes, as well as looking at the problem solving and how it culturally reflects them. So it provides them not only a skill set for entrepreneurship, but to control narrative. And I think that's critical for African-American communities as we're trying to, one, create sustainable systems, but then take that to thriving systems. And you can't do that without planting seeds in the young people and creating that classroom where it's intergenerational.
Right. And so let me ask you, so you've been with the organizations. Can you remind me how long you've been with the organization?
Since 2003.
Wow, and how long has the organization been around?
Since 2003.
So you've been with it since the inception.
Yeah, I was one of the original youth.
So can you share with us an example of a company that you saw from infancy that's now doing something that we all can look to and say, wow, that's an incredible example.
Yeah, absolutely. I can give you two examples.
Great.
One is called KI New Media. So I want to say in 2006, we decided that we would create a web design, graphic design company. And for two reasons. One, we're a 501c3, so we are a nonprofit. But one of our, main philosophies.
Let me just interrupt you really quickly, Diop. So Jerome, 501c3, they're a nonprofit. Would they have been able to apply for EIDL and or PPP really quickly?
Yes, they would, just for those programs.
Okay, so that's the real life example of someone on our panel who qualified for the PPP and the EIDL. EIDL, for everyone who's on in the session, is still available. Okay, Mr. Adisa, please continue.
Well, and I do believe we did apply for PPP,
Great.
so we want different enterprises that provided that sustainable revenue stream, because sometimes grant dollars are not as sustainable and you don't have as much, control over your desired future state. So KI New Media was a classroom for young people to, one, develop skills in graphic design, web design, videography, which allows them to have the skill set to create and control narratives. But then you can also provide that skill sets to different entrepreneurs, different organizations. So they get a tangible classroom on, one, how to interface with clients, how to structure teams, how to look at cash flow, how to walk from the first client to, all right, now we're managing 3 or 4 clients. And then we weave in different tools. Have you read Good to Great? So you can look at how to build a company and how to scale it. Have you learned how to manage your cash flow? So I think we're still running. So 2006. So yeah, it's been 14 years. And we've had a lot of different young people come through that program, and some have gone to create their own design firms. And one of the beautiful things with that is one of the young people that have been a part of our organization decided that she wanted to go and create a firm with her brother, who had also been a long-time partner with our organization. And as they grew, they began to subcontract work back to KI New Media. So through that development of people, you also are creating a network, an infrastructure, so that you all can continue to survive, grounded in the culture that you are, creating together. So that's one. I'll give you another one. From the very beginning, we placed a lot of emphasis on healthy food, and not only consuming it, but producing it. So we began to create community gardens. And we've done that since the beginning, and we're still doing that, and we're expanding. We just purchased a pretty significant lot size, and we're teaching farmers how to, one, grow their food, but also how to take it to market. In connection with that program, we developed a project called CCFI, which is called Community Controlled Food Initiative, which provides food shares to community members for a monthly fee. And that's also another tangible classroom where young people have been able to see what are all of the pieces that it requires to run an enterprise, and also adjust to the fluctuations from the environment, but simultaneously it being grounded in addressing challenges that our communities face. So it's not just about, return on investment, but it is about how to create some reciprocal, refreshing, sustainable systems in our community that we really need. And the young people see how to do that from beginning to end.
You know, I love both of those answers, and they kind of give a full picture of of what your organization does. And along there is a link to your website for those who have a further interest in finding out a little bit more. I'm going to circle back to you because I see there's a really good question. But before we hit that question, part of the title of this session is Alternative Funding and PPP Forgiveness. So, Mr. Jones of SBA, when folks are ready to get their PPP loan forgiven, do they just put it in the mail to the SBA and ask us to forgive it?
Oh, that would be so nice and easy, wouldn't it? No, so there is a forgiveness application and a forgiveness process. And all of the lenders, so go to the lender that granted you the PPP loan and use their process and the SBA application to apply for forgiveness. Again, I want to reiterate that documentation is so very important with the forgiveness program. So make sure that you have well documented evidence of how you spent that money. Very important. A lot of companies that use a payroll service, many of the payroll services have put in place a process just for PPP loans. So that's a great resource. But you don't have to have that. Just make sure that you document how you spent the money. Now, once you submit it to the lender has 60 days in which to let you know if they have any concerns or questions about the forgiveness, in which to get those questions answered and submit it to the SBA. Now, the SBA has 90 days to get back with the lender to let them know if they agree and are forgiving the loan and therefore paying the bank's loan off, or to come back with questions for the lender. Now, that doesn't mean that this process has to take 60 days with the lender and 90 days with the SBA. Those are just maximums.
Mm-hmm.
And I know many lenders right now are accepting forgiveness applications. Not all of them are, but many are. So I would check with your individual lender to see if they are currently accepting forgiveness applications.
Hey, Jerome, I'm glad you just said that because we had a question from Jill. It says, we received the PPP loan, but was informed to wait to apply for the forgiveness through our bank. Should we continue to wait or should we press to make the application for the forgiveness?
So they have to go through the lender that granted them the loan because that is who would be paid off with the loan. My understanding is there is no other way to apply for forgiveness other than through the lender.
Thank you. Thank you. That's a very good question. So I have a question from an Alvin, and this is for Diop. He wants you to talk a little bit more about the strengths and limitations of entrepreneurship as a model to address the racial wealth and power gap. And it's funny that that is brought up because in an earlier session, one of the panelists stated that from her estimation and through several components of various research, entrepreneurship is one of the fastest ways to close the racial disparity wealth gap. So can you please speak a little bit as to your organization's role into helping close that gap?
Yeah, so I think, well, on the strength side, being able to, once again, control, your desired future state by having economic engines. So if you learn how to, basically entrepreneurship is learning how to create opportunities for self. So if you know how to do that, that's a major strength because then you're not reliant upon dollars that you can't generate yourself. So I'll say that's one. I think one of the challenges for African Americans is, whether we like it or not, a lot of times the resources you have access to is grounded in your social capital. It's grounded in the relationships you have. So people of color don't necessarily have relationships with the dominant population or those that have majority of the resources. So that's a challenge, but we're not limited by that challenge if we can be intentional with developing relationships with people that don't necessarily look like us, but have principles and an understanding in what we're trying to accomplish. So, for example, if we say we are developing an enterprise in the tech area, then we have to prioritize developing relationships in that area, but we're not prioritizing the transaction. Oh, I can develop this relationship and get access to these funds. No, we're prioritizing the person, the people in that area. But we're being strategic about that because we're trying to move our relationship forward. And then I think the more you practice that, the better you can get at identifying archetypes, people's personalities, what they are willing to support, and how you can make them a part of a shared vision. So then you begin to develop relationships, collaborations, partnerships on projects. It takes a long time, but you can then over time expand your social capital, and then you can access funds from those that have a lot of resources that believe in your work. And that's how you can begin to close that gap, because the gap is there because there's a dominant population that has access to majority of it, and there's a minority population that doesn't. So if you can create opportunities within your community, but then go out and be intentional about developing relationships, you can get access to those resources and make sure that you pump them back into your community to make them strengthened by economic engines that you are creating and running.
Thank you for that. I think with regard to COVID-19, we're going to see a lot of people who have taken a hit to their credit.
Nicole,
Mm-hmm.
I think Ella had something to add.
Oh, please, Ella.
I wanted to add what he just said about those relationships, taking advantage of opportunities and networking and working with the resources in your community. There's a gap in terms of access to capital for African Americans and minority-owned businesses and women-owned businesses. And that's one of the focuses that ECDI has in terms of closing that gap. And that's why we're part of this ecosystem in the Cincinnati area. From April to August, the last couple months, that we've lent out more than $8 million. But the important thing is 70% of that went to minority-owned businesses and 50% went to women-owned businesses. So we're here, part of that resources. Now, we're not the only resource in the community overall, but I think those relationships that was referred to earlier is important. Like someone asked earlier in one of the sessions, how do I know about these grants that are coming up or different organizations offering grants? A couple months ago, List had 2 rounds of grants that they made available. And there are other corporate entities are doing the same thing, reaching out to minority and women-owned businesses. So your relationship is very important. Stay in touch with your resources that you have, like SBA, Small Business Development Center, SCORE, our economic development partners in the community. I would encourage everyone, especially minority-owned businesses, stay in touch. Let us know what you're doing in the community and ask us, do we have any resources that are there? There are a number of resources that are free. There are some resources that just pop up for the next 6 months. So you want to know, how can I take advantage of it? And that's how we work together, the groups of partners in the community. But the key thing is staying connected and using your social media as far as your business. We've created a program to help those businesses that were impacted by COVID-19, that were in business as of February 15th. They were not connected on e-commerce anywhere. So their customers didn't know how to get in touch with them. They didn't know what was going on. So now we're able to provide those resources, and many of these businesses qualify for that funding, but there are other resources out there as well. So I just wanted to add that.
Ella, I think that's a great point. I have people in the community that I meet at events like this or other activities that I participate in, and they'll call me once every couple of weeks, once a month. Hey, Nicole, is there something that I need to be made aware of? Is there funding out there? Is there a program out there? And these are people who are actively staying engaged with someone who is a part of the economic development community. And for example, Ella Fry the City of Cincinnati, Small Business Development Center, SCORE, we work so closely with each members of the economic development scene in our region. And for you to just check in with your, if you are in the Cincinnati region, check in with us. If you are in another part of the country, you're going to have a similar network that exists for you to connect with and move your progress with regard to your business forward. It is so important. And if you're not seeing something, if there's a training that you need, if there's a networking event that you're not seeing, you're thinking in yourself, I'm a hairstylist and I'm not seeing anything regarding the expansion of salon services.
Right.
Out to someone like an Ella or myself in your community, or to us directly if you're in our community, because then our job is to be subject matter experts in a room or virtually in the time of COVID-19 and put on a program to address the needs and concerns that you are not currently seeing out there. So it's really important to stay in contact with us and stay engaged. Jerome, I did want to ask you, how important do you think it is for the community who may not have that score? Because I know you have a strong lending background, and then you also in a previous life worked for the Small Business Development Center. How important do you think it is? So if someone were to go to a traditional bank and they were turned down, to then reach out to the available resources to assist them in perhaps getting that credit score up or getting themselves to a level where they are now attractive to either a traditional lending establishment or an alternative lender? Sure.
So Small Business Development Center is a great resource for that. I know there's one in pretty much every community in the state of Ohio for sure. So I would say this, it's very important, one, that you have a sound business plan that make sure you address the cash flow of the business or the projected cash flow, but often overlooked. You can have a great business plan, but if your personal credit is not where it should be, a conventional lender is not going to extend credit. So that is very important to address. There is a consumer credit counselor here in the Columbus and Central Ohio area called Apprising. I'm sure they have something similar in Cincinnati and other areas. So that is a resource that is not free, very affordable, that can help you address that side of things as well. But those are two key components that you must get in place to get traditional financing. Now, as far as alternative financing, the most common way is how most small businesses actually get started, and that's bootstrapping, using your own personal resources. So, your savings or your credit cards or your personal access to credit. Now, outside of that, a resource that has been getting a lot of publicity over the past several years is crowdfunding. But keep in mind that crowdfunding is not a tool for every small business. It all depends on what your mission happens to be. If it's something that usually tugs on someone's heartstrings, you have to get someone that you don't know in most instances to lend you money, or actually in this case, give you money towards your small business enterprise. So again, that doesn't work for every small business. And I also want to mention another program called Kiva. So Kiva is a 0% interest loan that works similar to crowdfunding. So you have to get people who are not familiar with you or your small business to lend you money at 0% interest. It's not a large amount of money. The maximum amount is $10,000. But most small businesses, just to get started, don't need much more than $10,000. So that's a resource to look into as well. Kiva, kiva.org is a good resource for some small businesses. So look around, research, look at the alternatives that are out there, for your small business.
And on the,
Great.
I was just going to add, sorry,
Diop, I had a quick question.
go ahead.
Can you go ahead?
I was going to add on the Kiva piece. I believe it's 0% interest rate. And I believe for the first 6 months, you don't have to make a payment. So just.
True. Good point. Very good
that's
point.
important to know. That's good information. But Diop and Ella, I wanted to follow up something that Jerome said and why I think organizations like you all is so important. And it is true that bootstrapping is very important for many startups or, to friends and family. But if we're going to be real and we're going to look at research and we're going to look at information put out by the Federal Reserve, if you are in a minority community, oftentimes friends and family are in a similar economic situation as yourself. And that might not be a position to lend money. And therefore, that's when those alternative sources of capital become so important. So can you address, from your perspective, the best way for people to reach your organization when a traditional lender has told them no, or when they have, gone to friends and family don't have the funds that they need to put their dream into reality?
Well, first, I recommend that they come to us first when they have a financial need or they're looking to find funding. We will share with them all of their options. And in fact, the Women's Business Center is a Kiva trustee as well. So we can help someone with the initial application for Kiva, because sometimes when you go online and you apply, you don't have the complete package of information. We can work with individuals, help them develop that business plan overall. And it is correct, it's a 0% interest loan. But the key thing about that is they look at the character of the borrower and how you package your situation in terms of your business plan. Because at the end of the day, we want you to be successful. So we want to help you with the tools that you need to make the first presentation. I've talked to clients who went to the bank and they just made an application. I said, where's your business plan? Where is your projections? How can you show you have the ability to repay the loan? And they got denied because they did not have a business plan. I mean, they just went to the local branch manager, submitted an application, and they applied. And I said, it takes more than that. Doing your homework and being prepared, we help you with that. Like, we'll review your business plan with you. We'll review your projections. They have to make sense. And one of the clients asked me, said, where do I get numbers for projections? I said, you just can't pluck numbers from the sky. It must be based on some logical assumptions. How many customers you think you can manage in an hour? What is your fee? What's your competitor's rate? Are you being competitive? So these are the things we help them think about, because they don't think about that. I have my business idea, I want to run with it, or someone says, I've taken my 401k, or I've taken some savings that I had, and I start a business. You can, but you want to reduce your risk of loss of your personal savings. So we can help you, and like other resources in the community, to do that. So come to us first. Let us work with you. You're not required to borrow any money from ECDI. We'll be happy to assist you and get a traditional bank loan in terms of that, because we want you to be successful. So you'll hire people, you'll grow, and you'll expand.
Yeah, so I guess I'll just add, Kepper, we also help people with applying for Kiva. So much of what Ms. Ellis said. And then in addition to that, we've created a fund where we provide monthly winners a grant. It's only about $500, but that can help. And entrepreneurs and artists can apply, as well as families, because families also need extra dollars during these times. And then I would say the other thing that we have doing it is entrepreneurs can apply for our incubator. And in that incubator, we're going to spend a lot of time teaching people not only how to bootstrap, because bootstrapping is a critical approach, especially for entrepreneurs of color, But then how do you use bootstrapping to launch, create a body of work, and then walk that body of work to the next step and the next stage where then you can access more funding through intentional relationship development and proof of concept. And all of that can be found on our website at kepra.org.
Give me an example. When you speak about bootstrapping, tell me what you mean in real life, concrete examples. What do you mean?
Yeah, so bootstrapping is basically, hey, I want to create a business. And a lot of times people look at, all right, well, I don't have this or I need that. But it's to start from an anti-deficit perspective. What do I have access to? How much money do I have in my account, in my savings? How much money does my family have? Or if I'm working a job, are there coworkers? And the one way to look at it is, what relationships do I have that are very strong relationships? These are people that believe in me and who will take a risk on me. And then you use those relationships to start, collecting the resources you need. And then you launch with those resources. And through the launching, it'll be a lot of lessons you learn through that. But the key is to stay consistent, because the consistency will deliver a message to those people that took that risk on you. And they took that risk not because they're trying to turn a dollar, but because they believe in you. They have a commitment to your development. So if you honor that commitment to your development, then they will walk with you as you grow. And as you grow, you'll have that body of work. And then you can use that body of work to then go and leverage more resources and grow it incrementally. Is that clear enough?
That is a clear example. And when you say people who are committed to you and what you do, you're not always talking about financial. People could believe in you in terms of providing sweat equity into your
Absolutely. Yeah. So all forms of capital, when you're creating a business, it can be people's time. They can donate a truck. They can donate a van. They can donate some food for you to provide to people that provided sweat equity. You have to be very flexible and adaptive to whatever people can provide to your vision. And then also be comfortable with creating shared vision. You have more momentum when you can, align yourself with people, and being adaptive and flexible in that provides more opportunity to grow and stay alive.
I think that's an important point, Dia, simply because I get so many calls from people who go to business startup classes, and then they say, they want me to ask for startup capital for my aunt or my mom or my brothers or my sisters, and they don't have it. But you just articulated so clearly other ways other than monies that your community can contribute to your success.
Absolutely.
And any contribution towards your overall vision is going to be important. Now, capital is critical, and I am not downplaying the importance of that. But Diop articulated, you articulated so many other ways that capital, other than capital, that resources could come into play with regard to assistance. Aubrey, I know you had some questions that you saw come in.
Yes, so I'm going to read a couple questions from Alfred. Let me just scroll back to that. His first question says, the debate is between access to capital or customer. Which one should we be fighting for? 8A, MBE, DBE program to get more customers for Black business or access to capital? And I asked him to clarify, and he said, when are they going to come up with a plan to help all of us instead of just one or two of us to make it?
Okay. So as far as I can speak to the 8A a little bit, I'm not the expert. We do have experts in our office on that program. So the 8A program is a federal program that is designed to help minority businesses obtain government contracts. That is not for everyone, however. You do have to have the financial wherewithal and capacity to perform those contracts. So typically those are companies that have been around for a while. You can't be a startup and really access the 8A contracting program. Again, for more on that, you can contact our office, and Nicole Aubry or myself can put you in touch with the experts on that program. So that is a program that I can personally say I've seen it help so many small businesses, and some of them extraordinarily so. So that's one program that I do know works if used and used correctly, and you seek the help and guidance that's out there for that program. What were the other programs that were mentioned?
MBE and DBE.
Mm-hmm.
So the MBE program, the state administers the MBE program. Again, now that is a program that obviously you have to be a minority-owned small business, at least 51%. And I would contact that Department of Administrative Services, or Development Services Agencies, I guess it is, DSA, who can assist you with that. DBE, again, is another program for disadvantaged small businesses. These are certifications. It just gives you a certification. It doesn't do anything for you. You still have to put in the work. You still have to seek the contract. So many small business owners that I have encountered over the years, they'll get a DBE or an MBE or even 8A and just expect the business to come to them. It doesn't work that way. You still have to put in the work. There are resources that can help you. PTAC, Procurement and Technical Assistance Center, can help you with that. But and I'm sure Ella Fry's Women's Business Center and ECDI can assist with that. But again, these are not savior programs. They help you. You still have to put in the work. It's not a cure-all or a savior program, but I do know that it has worked for small businesses. It just gives them another avenue to access revenue sources.
Thank you, Jerome. Ella, do you have anything to add to that? I think you're muted.
I would say, like, resources through the African American Chamber, they can help with those certifications that you're looking for, which is very important about relationships. I think each one of these programs solve a problem in the community, and that's why we have those programs. So if you use them collectively and you know your resources, I think that was the goal, to help increase minority and women-owned businesses by having these designated programs on the state level, as well as what the 8A program on the federal level is very important. Procurement opportunities. Here we talk about customers, consumers, who is in your market, who's a part of your supply chain in terms of those relationships. I had someone I had spoken to who were in the Kroger market now. They weren't in the Kroger market before, and now they are, because they had a track record, they had the certification, and certain corporate entities are looking to do business with minority and Black-owned businesses. In fact, even the construction industry is the same way. So these programs are tools that we have to utilize. If you don't utilize them, guess what's going to happen? Those programs are going to go away. And that's the last thing that we need, because we haven't reached our goal in terms of percentage of entrepreneurships for minority and women-owned businesses. And it's very important. Use those programs and tell people about those programs. I know other people use them, and I talked to a lady who was a printer. Basically, with her certification, she was able to double the size of her business. And she got more exposure, not just on the local level, but on the regional level as well. So definitely, I think those programs are very important, and we want you to use them.
Ella, that was really good information, and you said something that made me think about, so much is changing in today's world. Mm-hmm. Consumers are demanding that companies look like, do business with members that support their company, right? Mm-hmm. Many companies have recently, I could name, off the top of my head, at least 20 companies that have renewed their commitments to diversifying not only their leadership ranks, mm-hmm. with regard to expanding what their company looks like, but also with who they purchase things from, and who they do business in terms of a business to business relationship.
Right.
So in order to contribute to this desire that frankly should have always been there,
Mhm.
you speak to both Diop and Ella, talk to the importance of partnering with other small businesses to go after a project that might be needed by a private company or at the state level, the federal level. What is everyone's thoughts on that? The importance of partnering to make yourself stronger by virtue of coming.
Here again, we're talking about relationships, looking at opportunities to do joint ventures is very important. I was talking to someone in procurement at the Cincinnati Metropolitan Housing Authority, and they were talking about some of these contracts are too big for one entity, but they can come together and create a limited joint venture to complete the project based on creating a track record for each business so they can grow. So many times when they get in a competition period, bidding process, we look at historically, if you've only done jobs for 250,000, now this job is $1 million. Now look at who you can partner with to joint venture. Now it's all about trust. So you have to look at those opportunities as well. But I'm talking about professionals. We as a community know a number of businesses in the area, whether they're in construction, whether they're into office development and supplies, or whether they're offering technical services along those lines. Joint venture is one way to grow your business and get a larger percentage of the market share. There are opportunities out there, and many of our businesses are very successful. So don't be afraid to help scale your business up. It's all about scaling your business as well. So when the question came up about bootstrapping, I thought about growing your business in phases or stages. Not all of us can hit the home run the first year that we're in operation, but you plan your growth and you control your growth. And yes, Nicole, joint ventures are very important. And that's how many companies grow into middle-sized companies as well.
Yeah, and I guess all I add is pretty much ditto from the proposal side. If you have a partnership, then it communicates more capacity, more expertise, and a broader base of a portfolio. And whether that be if it's for entrepreneurs or a for-profit company for a bid that looks favorable, and if it's a nonprofits partner together if they're trying to submit a proposal to a foundation, and sometimes it may be asking for something larger than your annual budget or something more than you've ever had access to. So you can use partnerships to create a strong proposal. And I think on the relationship side, once those experiences happen, you begin to develop, a deeper relationship, and then you all begin to hunt for opportunities for each other. So now it's not just limited to the capacity of what I can do or what my organization can do, but you begin to look for opportunities with the consideration of your partners, which then expand your horizon and what you can accomplish in the environment.
Good point.
Thank you. So I have one question. I wanted to go back a little bit that I saw from Will Carter. He says, did I hear one of you were a resource on crowdfunding?
I think, Ella, you said that if you're talking about the Kiva trustees, that's crowdfunding?
Crowdfunding, yes.
Yes. Okay.
We can assist someone with that. And there are other people in our ecosystem that focuses on crowdfunding as well, that we can offer those contacts and help you build a relationship with them as well. So also it was brought up about venture capital in terms of as an option, as alternative funding. We in our ecosystem in the greater Cincinnati area have partners in the community, Main Street Ventures that look at venture capital. Centrifuge is another entity in the area that works with clients just like we do in terms of finding funding option and what is the best fit. So yes, we can provide that technical assistance as well.
And Deborah Davis, who is the Cincinnati director for MBAC, mentioned that MBAC, which is the Minority Business Assistance Center here in Ohio, is a KIBA trustee as well. Again, that's Deborah Davis with the Minority Business Assistance Center, and she has listed her website higher in the chat section. So I think someone, you know what, we're going to just go for it. Someone put a question here. They seem to think that we're talking quite a bit about the importance of relationship development, relationship building. And their question is, if it was about relationships, then why is it still so important to have programs like 8A, MBE, DBE? And this is probably just going to be from our opinion, and not something. So this is just going to be a conversation piece. What are your thoughts with regard to that observation? And again, if it was only about relationships, why do we still have programs like 8A, MBE, and DBE?
I think it's important for the connectivity in terms of using those tools. When we say relationships, I'm not just talking about from the resources that are available. I'm also talking about from a lending perspective as well. Eventually, a business is going to get to the point where they need to have those relationships, like the minority supplier agency that work with and helping minority-owned businesses, because access to information is so important. The program is available. However, gradually people are coming eligible for those various programs. There are certain things that they have to do. So it is a combination, relationship, contact, whether it's your customers or whether it's your creditors or lenders, because we want to see you grow. And when we talk about relationship, I always look at a foundation. You develop your business with a foundation, your roadmap, your business plan, and your anchor. You have to adjust and navigate as you move forward. If you didn't have relationships, guess what happened? What happened when we had COVID-19? If you didn't have those contacts, how would you know who to call and tap on for assistance and help? You never know what's going to happen in the future. I was talking to one client earlier today, adapting to the culture. There's been changes made based upon our economic standpoint. If we didn't have those relationships in these programs, many of those businesses would be closed permanently. They would not have access. Just to think, if you didn't have the DBD, the procurement programs that you have, if you didn't have that, and you were a small business struggling, whether you're for-profit or nonprofit, if you didn't have those contacts, how would you move forward? You would still be stunned. Now we have we're offering you something. We're giving you, or we're empowering you, saying, have you done this? Let's work on this and build this up. So we're prepared to propel beyond this pandemic where we're in now. Many businesses, we had to help pivot during this process. Government regulation shut them down, restricted their revenue. They had to give customers refunds because they couldn't deliver those services. So these are tools that we say are available. No one is required. I have a gentleman that says he doesn't want minority certification. He wants people to use his business because his business offers an excellent service. That's wonderful and great. No one forces anyone to use it. But if you feel that you can utilize this program to assist your business, why not?
Yeah, I get the only thing I'll add is that I don't necessarily see them separate. So you have different funding frameworks that basically outline the expectation of the lender, the expectation of the borrower, as well as you have different, business structures that outline the expectation of how the business will operate in the environment. Those are tools, as Ella said, and you use those in the environment to accomplish your goal. But there is never a step in the process that you don't meet people and interact with people. So you have to understand the tools to your best ability and use them. But essentially, it's about how you treat people. It's about how you learn people. It's about how you understand people, because then they will go to bat for you and you will go to bat for them in the highs of times and the lows of times. So for me, it's all about relationships. If I sit down with someone, we may be trying to accomplish a goal, but fundamentally, I'm trying to learn who they are and why they do what they're trying to do. And if it's not about that, then it's a transaction. And I feel like we've been in a transaction dominant world for far too long, that it has to be more about developing deep relationships and connections. And then that's how we change the paradigm. And that's how we build something that's renewing and not extracting.
Add to that as well, that utilizing those programs opens up a network that you might not otherwise have access to. The 8A program in particular only lasts for 9 years. During that time, it's up to you to utilize that network, grow your capacity. So at the end of 9 years, you can now make your own way in whatever industry that you happen to be doing business in. So it's again, it's just a tool, but utilize all the tools that are available to you.
Note of relationships and creating relationships, I wanted to point out that several individuals have left their contact information in the chat box. So I would definitely write those down or copy and paste, whatever you decide to do, because there are individuals in there who are willing to help with a lot of these programs and can help you, further your business or start your business. So I want to thank Deborah, Jolita, Will, for example, for leaving contact information and links in there for our participants to access.
And I see a point or an observation from Mr. Carter. It says that the reality is that as an entrepreneur, your network is resistant to supporting you until you get traction from a qualified entity or are visually successful in the market. Because Blacks are typically cash poor, we are super conservative in supporting ventures. Those Blacks who are doing well financially get propositioned a lot, so they are cool to extending relationships with those they meet seeking capital. Net, our desire is to find a more efficient way to connect with potential investors. And that's when I said, Mr. Carter, reaching out to the economic development network in your respective area is so crucial and important. As of late, many venture capital firms, many angel investors have put up goaling for the funding of minority companies, that they want to hit this percentage of funding minority startups. And it is an increase from what they have historically done. So SBA, our job is to assist the small business owner at every single phase of their development. And that's from inception to, if you have an idea, you are dominating in the US and now you want to bring that good or service overseas. So if this is a need that you are seeing that is lacking in your community, it is certainly within the purview of the Small Business Administration or other economic development entities to reach out to those angel investors, those venture capitalists who have made that commitment to support more minority and women-owned firms than they have historically done so, and put together an event where you can meet these people, where you can dialogue with them one-on-one. We have done that in the past, and that's something that I know I look forward to doing in the future with community partners such as Ella Fry, City of Cincinnati, Minority Business Assistance Center. So we could definitely address, that very good point, Mr. Carter.
Let me say something too about venture capitalists, and I'll say this because I've sat on panels with a number of them. You really have to have your ducks in a row when you go see a VC.
Yes.
They get propositioned a lot, and I'm going to tell you now, every business doesn't fit into that world. They look for one of them called it sudden wealth vehicles. They're not your partner for life. They want to invest in a tool or a facility that gets them to their revenue goal quickly. And that does not fit every business. A startup restaurant is not something that's going to work in a VC model. So I would tell you to research, make sure you have your ducks in a row and you're ready when you meet a VC. Make sure that it's a fit for your small business because they have a limited number of time, a limited amount of time. So just be ready. Just be ready when you meet them.
Have that elevator pitch ready.
Mhm.
Be able to speak to your concept in such a way that no one has any question about what it is that you're trying to do and accomplish. And remember, for a startup company, you're selling yourself as much as you are your concept. They have to believe in you as much as they believe in your concept. And so we often do elevator pitch events to get folks ready. And, you know, as everyone knows, that elevator pitch, what did they say? If you're stuck on an elevator with someone for a minute, what are you able to tell them in that 60 seconds that's going to pique their interest to get them to return your phone call? Do we have any other questions? Oh, Jerome, please go ahead.
No, I didn't know if that was a question that was directed at us or just a comment, but thank you.
I think we had a question from Mimi for Diop that says, what tangible real life examples of businesses and entities bootstrapping speak to you?
Yeah, I can answer that. So I believe I gave the example of CCFI, Good Food, and Cat in the Media. I can give another one. So one example is we ran a paint store for a few years. It was called KI Paint. And prior to that, we did some consulting work for a nonprofit that had recycled, reused building materials. And by doing that work, we developed a relationship with paint stores in the city of Indianapolis that would donate their paint. So what we began to do was take that relationship, that donor line, and sell that paint to community. And, you know, so a lot of times paint companies would have mistints. People would come in and would buy a certain color and they would get the color wrong. And they would usually just try to dispose of it. So we decided, hey, well, what if we just come and collect those for you for free and then sell that back to community for $5 a gallon? And we created that paint store in the Black community. So you had homeowners, you had renters, you had real estate investors who didn't necessarily have access to buying paint at the traditional price point. And they can then keep their properties up. And I think that was a great example because it was one relationship we learned from someone that gave us an opportunity to consult their entity. And then we nurtured that relationship to create a business. And the only thing we really had to pay for was zoning at the city, because where we wanted to particularly have it, we had to go through some city steps. But it was very low capital. And I think the first 3 or 4 years, we began to generate about $50,000 to $60,000 per year. So that's one example.
From paint that would have otherwise been discarded?
Exactly. So then it kept paint out of the waste stream. So it had an environmental aspect as well. And we had young people managing the store and working with seniors. So it was an intergenerational aspect. And a lot of them were Black men, young Black men. So it was a great example. But I will say, as entrepreneurs know, when the environment changes, sometimes you have to change. So after the housing crisis, what did paint companies start to do? They started to sell their own mistints. They stopped donating them. So then that took away our product line. You know, a lot of people will hold on to the business and say, you know what? This means a lot to me. And they'll go down with that. We just realized that the writing was on the wall and we transitioned out of that business.
Gotcha. Sometimes it's important to read the writing on the wall. You know, sometimes that's very important. So we're going to, we may have one additional question coming in soon, but while that's being prepared, I want to give, I'll start with you, Aubrey, then Jerome and Diop Ella, to provide a few parting words. This was a pretty expansive session. We've talked about quite a lot of things. The topic was alternative funding and PPP forgiveness. So could each of you provide your thoughts with regard to something tagging to the topic? Thank you.
Thanks, Nicole. Before I give my parting words, I wanted to ask one question. Ella, do you mind speaking about your contract assistance programs before we start wrapping up?
Yes, we have a program called Capital for Construction, and this program is only for minority and women-owned businesses that are in the construction-related phase of a project. Individuals, we've noticed there was a study done by ECDI that found out that 2 years ago that we were losing a number of our minority and subcontractors, especially African Americans. And it wasn't not because of their expertise or access to projects, it was access to capital. So we created a special program for minority owned business, and you do have to be certified. So for example, if you were a painter, you had a painting contracting business and you were looking to bid on a job with Messer, or if you were a carpenter, and that contract required for you to have upfront money to pay for your supplies, pay for your labor, but you wouldn't get your first draw until the first month or second month or 3 months. We help you fund that contract. And basically, it's a three-party agreement between the general, the subcontract, and ECDI that we can lend up to 50% of that contract. So if there was a contract for $150,000 and you said, hey, Ella, I need at least $40,000 to $50,000 to start that, that contract itself is collateral for the loan. And it's a very low interest rate that we have for that. We find that it's very difficult for many contractors, electrician, carpenter, painter, concrete people to get funding for those jobs. So it's important that they know that this is available. It's only available in Columbus and the Cincinnati metropolitan area, that we provide this special funding for contractors to work. Even if you get a cleanup job for the Metropolitan Housing Authority or whomever, post cleaning after construction, you would qualify. If you're doing something special, window installations or cleaning windows, something related to a contract, but you need funding, come to ECDI. And we do require that you at least be in business for 1 year, and you do have your certification, because we want to make sure it's geared to minority owned and women owned businesses. So that was something I did not talk about. Thank you.
Aubrey, could you put the ECDI website in the chat?
Absolutely, one moment.
Okay. While she's doing that, Jerome, we'll come back to her for her parting words. Could you provide things that you want to leave to those participants in today's session?
Sure. So first is the EIDL loan program. Funds are still available in that program. I do know that the website is up, but it's covid19relief.sba.gov. You can get up to $150,000 in that program, very low interest, 3.75% for profit, 2.75% for nonprofits, 30-year term. So your payments are very low with no prepayment penalty.
Great.
Go ahead.
No, that's great information. And of course, they can always reach out to you if they're in the Columbus area, should they have any questions.
Absolutely.
Email address in the chat.
Yeah, I did see it in the chat, but it's my name, jerome.jones@sba.gov, and it is in the chat.
Outstanding. Aubrey, I want to circle back to you for your parting words.
Cool. Well, I just want to thank everyone for joining us, first of all. This was a really great conversation. I appreciate everyone's questions and comments in the chat. It's been very interactive, and I do truly appreciate that. I just want to stress that you all should reach out to your economic development network in your communities for assistance. I think a big theme that I took from not only our conversation today, but from the entire day was relationships. We need to build relationships. We need to nurture relationships in order to, advance our businesses. So I just wanted to stress the economic development networks and reaching out to them. Thank you.
Thank you, Aubrey. I see a question. What if you're outside of Columbus or Cleveland areas? Well, with regard to SBA, Ms. Hawkins, every state has at least one SBA office. Larger states have multiple SBA offices. So if you have any trouble, please reach out to me and I'll contact you with your local SBA personnel. Diop, could you please provide your parting words that you would like to leave with today's participants?
Yeah, I would say start with what you have and who you know to get going and develop a footprint in the environment. Research the tools that you have and decide which ones are best for you, and learn from them. And then decide where you need to develop relationships outside of your current circle and be intentional and deliberate about that. So I would say I would just add those.
I think that's excellent. Thank you for that, those words of wisdom. Ella, you're gonna be the last person to offer your words of wisdom. No pressure.
Okay. Thank you. I enjoyed this opportunity in sharing what we have to offer and how we are part of the ecosystem here in Ohio, in the area. ECDI does operate in all 88 counties in Ohio, so we're accessible in Northern Kentucky as well as Dearborn County. I think the important thing is to remember, use your resources. You have developed new contacts today. Contact each one of us, please. Take action today. If it's just to introduce yourself, do that for you, whether you're a current entrepreneur or you're thinking about entrepreneurship. Share our information with other people in your network. It's very important. And I thank you.
Ella, Diop, Jerome, Aubrey, thank you. Thank you for adding to this discussion on how we can continue forward in helping those with their entrepreneurial dream. For those who participate, please stay for the closing remarks by Dr. J.C. Baker and visit the booths. Please reach out to the network that Ella said, and I want to reemphasize, that has been developed for you today. Mm-hmm. We are here to assist you get to that next step of your journey. Mm-hmm. This was a pleasure. I thank all of you. And again, please stay for the closing remarks by Dr. J.C. Baker. Have a good day, everyone. And I hope this was as informative as it was fun for all of us to do.
And thank you, Nicole.
Take care.
Thank you, Ella. Thank you.